Hello friends, welcome back to the fourth video of our mock test series covering principles and practices of banking paper of JAIIB. Now this video will cover module D, that is ethics in banks and financial institutions. Friends, this is very easy and scoring module with respect to your papers, but please pay attention to all the questions which I am going to cover in this mock test. This module will in fact help you clear this paper since most questions are analytical. But still this module also has some concepts which you must clear for getting good marks. Don't worry, I will try to cover all those concepts in this mock test, so just follow all the questions till last. But before we start, don't forget to get your JAIIB Masters pack from the links given in description of this video. Now this is a pack of 4 Power Pack books. All these are 1000 series question banks of IE, IFS paper, principles paper, accounting paper and retail banking and wealth management paper. Now all these books contain super special 1000 plus questions which are very important for your examination. All the books contains real exam level questions and that too with updated difficulty level. These are chapter wise question banks, so it's easier for you to finish these in step by step manner. Not only this, these question banks come with lots of case studies and numericals and that too with detailed solutions. The best part of this is that you get my full support with respect to any problem or any issue you may face in these question banks. Now you may also get individual books and also online version of these books. All the links are there in description of this video, so don't miss out on these amazing books. So let's start with today's mock test. And the first question is from chapter 51, that is ethics, business ethics and banking. And the question goes like this. Consider a situation where a banking professional is offered a large commission by an external consultant to approve a risky investment on behalf of a high net worth client without the client's direct knowledge. The professional knows that the investment carries significant risk but is tempted by personal financial benefits. Which professional duty is most crucial in helping the banker navigate this ethical dilemma and what course of action should they take? And these options are given to you. That is, first option is the duty of integrity and the course of action is the banker should disclose the offer and refuse the commission. Then option B is the duty of objectiveness and the course of action is the banker should approve the investment if it benefits the bank. Then option C is the duty of responsibility towards employer and the course of action is the banker should follow instructions of the external consultant if it increases profitability of the bank. And last option D is the duty of professionalism and the course of action is the banker should negotiate a better commission for personal gain and then make the client aware of the risk involved. Now friends, the correct option for the given question is option A. Please note, integrity is paramount in financial industry. It requires the banker to act honestly and in the best interest of the client. Now in the given case, accepting personal gains in exchange for compromising the client's financial interest is unethical and could in fact damage both the bank's reputation and client's trust. So the banker should disclose the offer and refuse any financial incentives to ensure decisions are made in a transparent and fair manner. So friends, I hope the explanation is clear to you. The next question is from chapter 51, that is ethics, business ethics and banking. And the question goes like this. A bank employee has been delaying the process of a genuine loan application to favor another customer with a more lucrative profile. Which ethical principle is being violated in this scenario? And these options are given to you. That is, first option is reliability. Then second option B is neutrality. Then third option C is transparency. And last option D is integrity. Now friends, the ethical principle which is being violated in this case is that of neutrality. Please note, neutrality refers to avoiding biased behavior in the treatment of clients. By delaying a legitimate loan to favor another customer, the bank employee is in fact showing favorism, thereby violating the principle of neutrality. So as you can see, neutrality ensures fair and unbiased services to all customers regardless of their profile. So as far as this question goes, the correct option is option B. The next question is from chapter 52, that is ethics at the individual level. And the question goes like this. A bank's investment advisory team is faced with a dilemma involving the recommendation of a new financial product to its retail clients. The product has higher fees and a more complex structure compared to traditional mutual funds, but it also offers potential tax benefits in specific situations. However, the product's risk profile is considerably higher and many clients may not fully understand its intricacies. The advisory team is under pressure to meet quarterly sales targets, and there is a conflict between prioritizing client welfare and achieving organizational goals. Which ethical framework would be most suitable for resolving this dilemma, and what should be the priority in the final decision? And these options are given to you. That is, first option is end result based thinking, and the priority is recommend the product selectively to clients who would most likely benefit from the tax savings, ensuring the maximum good for those who can understand the product. Then second option B is rule based thinking, and the priority is comply strictly with regulations and internal guidelines by explaining the product in detail, even if it means losing some potential clients. Then third option C is care-based thinking, and the priority is recommend only to clients with whom the advisors have built a personal relationship, ensuring they fully understand the risk involved. And last option D is purpose-based thinking, and the priority is evaluate whether recommending the product aligns with bank's core mission of delivering transparency and client-focused advisory services. Now friends, please note, in financial advisory services, the primary ethical obligation is towards the client's welfare and ensuring decisions align with the organization's core mission and values. Now in our case, approaches such as end result, which is our option A, and rule-based thinking, which is our option B, may provide short-term justification, but they overlook the core responsibility of acting in client's best interest. So the correct option for the given question is option D. That is, the purpose-based approach emphasizes the need to align decisions with the bank's mission of transparency and client focus, thus making this option more suitable here. Lastly friends, option C is also not appropriate, as basing decisions on personal relationship can lead to favoritism and thus inconsistent application of ethical standards. So friends, I hope the explanation is clear to you. Now, before moving ahead, don't forget to subscribe this channel, since this is the only channel that provides quality content. Also join my Facebook group where I post lots of one-pagers, mock questions and other useful stuff which is very important for your examination. You can also join my Telegram and WhatsApp channel and also connect me on my LinkedIn profile as well. All the links to join are there in description of this video, so do join after you finish this mock test. The next question is from chapter 52, that is ethics at the individual level. And the question is, Lin Payne's 4-part moral compass approach outlines different lenses for ethical decision making. Which of the following is not part of original 4-part framework? And these options are given to you. That is, first option is principle, then second option B is people, third option C is power, and last option D is public. Now friends, Lin Payne's original framework includes 4 elements, which are purpose, principle, people and power. The public lens is an additional element suggested to evaluate the transparency of decisions, but it is not part of the primary 4-part framework. Thus the correct option for the given question is option D. The next question is from chapter 52, that is ethics at individual level. And the question is, the golden rule is the moral principle emphasizing reciprocal action between individuals. Which of the following statements best illustrates the concept of reciprocity as per the golden rule? And these options are given to you. That is, first option is paying taxes to the government based on a predefined rate. Then second option B is following companies' policies to ensure compliance. Then third option C is returning a favor of equal value when someone helps you. And last option D is setting goals that are achievable and measurable. Now friends, the golden rule, also known as the ethic of reciprocity, is the concept of treating others in the same manner as you wish to be treated. Now the principle is grounded on the idea that social relationships are built on mutual respect, tolerance and compassion. Now reciprocity in the context of this principle involves a balanced exchange where actions are returned with an approximately equal response in terms of value and consideration. So this means that when someone does a positive action for you, example helping you in a time of need, you should also respond in the same way that acknowledges this action. That is ideally by offering a similar act of help or gratitude. So I hope by now you can easily answer the correct option, that is option C. This option perfectly captures the essence as it demonstrates mutual respect and balance in the relationship, which matches closely to the moral guideline of the golden rule. On the other hand, the other options do not align with the concept of reciprocity. Now, option A, that is paying taxes to the government based on a predefined rate, is a legal obligation but not a reciprocal action. It does not involve a mutual give and take between individuals. The next option B, that is following company policies to ensure compliance, is a formal requirement for adhering to rules but lacks the human interpersonal relationship of reciprocity. Lastly, option D, that is setting goals that are achievable and measurable, focuses on self-improvement and goal setting, which does not involve interaction or reciprocity between two parties. Thus, option C best represents the concept of reciprocity within the golden rule framework, thereby emphasizing the moral balance of giving and receiving in social relationships. So friends, I hope this explanation is clear to you. Next friends, if you are enjoying the content and found it useful till now, then don't miss to like this video, since this tells me that you are loving the content and it also motivates me to make more such awesome content. I would also love to connect with you all on the LinkedIn profile as well. You can connect with me from the link provided in description of this video. Next, let's move forward with our mock test. The next question is from chapter 53, that is ethical dimensions. And the question is, an Indian bank is reviewing its internal control policies after discovering several cases where employees were found to have privileged access to information that benefited them in making private investment decisions. This situation posed a clear conflict of interest, especially when these employees were involved in decisions affecting the bank's trading strategies. The bank's compliance team is now tasked with identifying and mitigating potential conflict of interest between employees and clients, as well as between the bank and its clients. Which of the following options would represent the most comprehensive approach to minimize such conflicts while balancing business requirements and compliance standards? And these options are given to you. That is, first option is implement a Chinese wall policy that prevents the free flow of information between employees working in the trading division and those in investment advisory roles and enforce strict monitoring of communication channels. Then second option B is enforce a mandatory disclosure policy where all employees must declare their personal financial interest and holdings every quarter, subject to random audits by compliance team. Then third option C is introduce a rotation policy where employees in sensitive roles such as trading or credit approval are rotated to less sensitive roles after every 6 months to reduce the risk of conflict of interest. And last option D is designate a separate compliance unit responsible for vetting all trades and investment decisions made by the employees, with the authority to freeze accounts if suspicious activity is detected. Now friends, the correct option for the given question is option A. Please note, a Chinese wall policy is a well-recognized approach in finance industry to prevent conflict of interest by establishing physical and informational barriers between departments. This strategy is particularly effective in cases where employees may possess non-public information that could be used to benefit their own interests. Friends, please note here, option B is a reactive measure and does not prevent the occurrence of conflicts. Next, option C might disrupt the business continuity without fully addressing the issue. Lastly, option D is overly stringent and could harm employee morale, leading to inefficiencies in managing daily operations. So friends, I hope the explanation is clear to you. The next question is from chapter 54, that is work ethics and the workplace. And the question is, in a financial services company, a newly promoted manager observes that some of their colleagues have been sharing confidential client financial data with unauthorized third parties in exchange of favors. As a manager responsible for the conduct of their team, which of the following actions would most effectively address both the immediate ethical breach and prevent future occurrences? And these options are given to you. That is, first option is initiate a confidential internal investigation and report the matter to compliance while instituting ethics training across the team. Then second option B is inform the employees involved that such behavior is discouraged but take no further action. Then third option C is warn the clients that their data may have been compromised but allow the employees to continue their role for lack of formal proof. And last option D is take disciplinary action without reporting to compliance to protect the company's reputation. Now friends, for the given case scenario, the correct action for the manager is to initiate a confidential internal investigation and report the matter to compliance while instituting ethics training across the team. Now this is crucial because sharing confidential client data with unauthorized party is a serious breach of trust and can result in legal, financial and reputational consequences for the organization. So by conducting a thorough investigation, the manager ensures that the facts are verified and the issue is handled through formal channels, thereby avoiding personal biases or unfounded accusations. Now in addition to this, introduction of team-wide ethics training reinforces the importance of confidentiality and ethical behavior. Thus the correct option for the given question is option A. The next question is also from chapter 54, that is work ethics and the workplace. And the question is, in a mid-sized bank, senior management is facing a challenge where the middle management executives are not effectively coaching new probationary officers and clerks, leading to a lack of engagement in ethical decision making. Based on ethical practices in the financial industry, how can middle management best contribute to the ethical development of new employees, and what is the rationale behind this approach? And these options are given to you. That is, first option is, middle management should focus primarily on financial performance metrics and encourage competition as it fosters a high performance culture which indirectly builds ethical behavior. Then second option B is, middle management should leave ethical training solely to senior management as they have more experience and can provide higher level strategic guidance on ethics. Then third option C is, middle management should implement strict adherence to compliance rules as following rules automatically ensures ethical behavior in new employees. And last option D is, middle management should actively serve as coaches and mentors to new employees, leveraging their proximity in experience and age, allowing new recruits to feel comfortable discussing ethical dilemmas and fostering an environment of trust. Now friends, in financial industry, especially with banking, middle management plays a crucial role in bridging the gap between new POs and clerks and senior management. Their relative proximity in both age and experience enables them to serve as effective coaches and mentors. Now this mentoring in fact allows new employees to discuss their ethical concerns openly, contributing to the formation of their ethical behavior, which is more effective than rule-based compliance alone. Friends, ethical behavior is in fact built on personal guidance and understanding rather than just following to the rules and regulations. Thus, as far as this question goes, the correct option is option D. The next question is also from chapter 54, that is work ethics and the workplace. And the question goes like this. A whistleblower complaint has been lodged against a private sector bank alleging substantial operational risk due to non-compliance with financial regulations. The bank, after investigation, finds that complaint is fake and intends to take action against the whistleblower. Which procedure must the bank follow under the protected disclosure scheme, and how does this protect the interest of all parties involved? And these options are given to you. And the first option is, the bank can immediately take action against the complainant without informing RBI as the complaint was vexatious. Then second option B is, the bank must seek to the RBI's approval before taking action and provide the complainant with an opportunity for a hearing before deciding on any action. Then third option C is, the bank must dismiss the complaint without further investigation since it was vexatious and take legal action against the complainant. And last option D is, the bank can take action only after disclosing the identity of the complainant publicly to justify its decision. Now friends, under the protected disclosure scheme, if a whistleblower complaint is found to be fake, the institution against which the complaint was lodged cannot take immediate action against the whistleblower without due process. Now in this case, the bank must first consult the Reserve Bank of India for advice on how to proceed. Now the RBI's involvement ensures that the institution does not act arbitrarily, thereby safeguarding the whistleblower against unjust retaliation. Not only this, the scheme mandates that the whistleblower must be given an opportunity to present their case in hearing before any action can be taken. Now friends, this provision is essential to balance the protection of whistleblowers, ensuring that they are not forbidden from raising genuine concerns, while also allowing institutions to address complaints that may have been raised with malicious intent. Also note, publicly disclosing the whistleblower's identity is forbidden here, which ensures confidentiality unless the complaint is proven fake, under which the corrective actions may follow. So as far as this question goes, the correct option is option B. So friends, finally we have reached the last question of our mock test, and the question is from chapter 55, that is banking ethics changing dynamics. And the question goes like this. A multinational bank is developing internal policies to align with varying data privacy regulations across multiple jurisdictions. In one region, the bank is focusing on limiting the collection of personal customer data to only what is necessary for a specific banking services. This principle is based on which core element of global data privacy frameworks as outlined by several regulatory bodies, including the principles of B. and Sri Krishna Committee report. And these options are given to you. First option is informed consent, where the customer must provide explicit consent for all data processing activities. Then second option B is technology agnosticism, where the data privacy policy should be flexible to accommodate new technologies. Then third option C is data minimization, where the bank collects and processes only the data required for intended purpose. And last option D is data portability, where the customer should be able to transfer the data across different banks. Now friends, I hope you can easily answer this question. So the correct option for the given question is option C. So please note, the principle of data minimization is a key concept in global data privacy frameworks, including those outlined by B. and Sri Krishna Committee. It emphasizes that institutions, including banks, should collect only minimum amount of data necessary to fulfill a specific purpose. Friends, this reduces the potential risk of data misuse or breach, as handling excessive or irrelevant data increases such data misuses. For example, if a bank only requires basic personal data for account creation, it should not collect additional information like customer preferences or unrelated financial history unless essential to the services. Now, this principle ensures that customer privacy aligns with data frameworks are aimed at limiting the overreach of data collection practices. Now friends, in case of informed consent, which focuses on autonomy of the user, or data portability, which ensures data transferability, data minimization is specifically concerned with minimizing unnecessary data collection, thus helping to maintain customer trust and regulatory compliance across all jurisdictions. So friends, I hope the explanation is clear to you. So with this, I wind up this lecture. I hope all the questions are clear to you. Also, don't miss out to watch the previous video of this series and do all the questions discussed in this series before your examination. Lastly, don't miss to get your JAIIB Masters Pack or online versions of these question banks to get the best results. All the links are there in description of this video. So thank you, and I will meet you again in another.